Hey, I'm Ben from Modern Graham, and today we are going to talk about Foot Locker in Incorporated. Yep, there we go. So stick around. I'm going to do a Modern Graham valuation, and you'll want to see what I think of this. The company name, of course, is Foot Locker Inc., and the ticker is FL. The current price is 40.04. The sector is consumer cyclical, and the industry is retail cyclical. Now, down here, we have the balance sheet items that I think are most important. We have total current assets, total current liabilities, long-term debt, total assets, intangible assets, total liabilities, and shares outstanding. All of those things will come into play in this valuation. Over here, you can see a chart of the earnings per share and the dividends per share. Blue is earnings per share. That went up and down in the 90s, but since the Great Recession, it has really done well and risen pretty strongly. Dividends they've raised as well. Let's look at the detail on that, though. Earnings, you can see over here that in the last, the last 30 years, we've had maybe one main period of poor earnings, but again, during the 90s, they struggled a little bit. But since the Great Recession, that has been on a rise. EPS MG is earnings per share Modern Graham. That is a weighted average of the last 5 years. So I take the last 5 years here, and I put the most weight on the current year and the least weight on 5 years ago to get the earnings per share Modern Graham. Now that helps smooth out that business cycle so that we can see more long-term trends in the earnings rather than the short-term ups and downs. And you can see that that has really risen a lot there as well. Dividends, they have paid dividends consistently since 2003. They did have a dividend before that in the early 90s, but then they cut that for a while, and now they've had it again for a long period. They have had a couple of times when they have cut the dividend, such as in 2021, probably in response to the pandemic. And then back during the Great Recession, they cut that dividend. So that is a little concerning that they would cut the dividend a little bit. That would indicate to me that they are not preparing to, or like they're not putting a priority on the dividend itself to try to keep that up. They do want to keep paying it, but they're not putting the priority like some companies we've seen recently that have they kept that dividend growing even when the earnings dip. Now over here you can see dividend yield has stayed between 1% and 2% for the most part, and dividend payout ratio has been about 25%. It seems like they might be targeting that figure, and if so, then they might have room to grow the dividend right now. Stage 1 is whether this company is suitable for the defensive investor or the enterprising investor. And remember the difference between those two. The defensive investor is willing to take the defensive investor is not willing to take extra risk, and they want to only go into companies that pass these tests so that they don't have to do further research, because that's really the key to the defensive investor, is they're not willing to do extensive research, whereas the enterprising investor will go a further step and go deeper into a company if it doesn't quite match the defensive investor tests. So anyway, let's look at this. Market cap passes that with over $2 billion in market cap. Current ratio is 1.54, so it fails the defensive investor's requirement there. Positive earnings for 10 years straight. Get that. Dividend for 10 years straight. We passed that. Increase in earnings per share by a third. We've seen 80% earnings here, so it passes that. PEMG, that is the price to earnings ratio using the weighted average earnings that I use. That is 7.69. It passes that requirement. Price to book ratio is 1.15, which is less than the 2.5 requirement, so we passed there. And if you've been keeping count, we're up to 6 for the defensive investor, and that is a passing grade. Now, enterprising investor, it passes all 5 tests, but it's also suitable for the enterprising investor because by default, if it is suitable for the defensive investor, it is then also suitable for the enterprising investor. So there you have it. Now, please take a moment to like the video, subscribe to the channel, and download in the description the free valuation calculator. Take a look at those things, only if you're liking the video, of course. Stage 2, determination of intrinsic value. Now, for this, I look at the Modern Graham value formula because remember, the value of the company is independent of the price. So we need to determine that intrinsic value so that we can know if we're getting a good deal on the company. And the value formula we use is taken from Benjamin Graham's book, The Intelligent Investor, and that is value equals earnings per share times 8.5 plus 2 times the growth rate. I have revised it to be this weighted average here. So that is the change I've made, but we have two variables to calculate, earnings per share Modern Graham and growth. So earnings per share Modern Graham, again, is that weighted average of the last 5 years. We get 521. Then we take that, and from 5 years ago, 388, to calculate the total growth over the 5 years of 34.29%. Divide that by 5, we get the average growth of 6.86% per year. And we have a safety margin here because growth is such a key variable in this formula. If you overestimate growth, even just a little bit, you can have a big impact on the value that you end up with. So it's important to have a safety margin there so that you're not overestimating growth. So we have one there, and that gets the growth estimate at 5.14%. Now, calculating the value, we take that, and we take the growth, and we get the value of 97.81, which with this very handy chart, you can tell that it is higher than the current price. And over here, you can see that the price is about 40.94% of the intrinsic value, which is undervalued in my system. Other figures that might be important right now, net current asset value, that's really a floor to your value. The price should definitely not drop below that. And Modern Graham value based on 3% growth is 75.49, and on 0% growth, it is 44.25. So if you don't think the company is going to grow at all in perpetuity, then it would be worth 44.25. And that's interesting because the market implied growth rate, which you get by putting price in for value in the formula and then solving for growth, the market implied growth rate is negative 0.4%. So the market is thinking that this company is going to get smaller over time. And if you disagree with that, if you think that it will at least stay stable, then that might be another way of looking at whether or not it is undervalued. Coming down here to the Modern Graham grade, we get 2 points for investor suitability because it is suitable for the defensive investor. Get 1 point for being undervalued, get 1 point for being trading below its Graham number, which we'll talk about in a minute. 0 for long-term dividend growth, half a point for dividend yield above 2%, half a point for trading below the industry average PEMG, and 0 for the NCAV, for a total score of 5. So this is another A grade company. Stage 3 is further research. If you've gotten this far, and you've determined that it is suitable for your investor type, and we've talked about how this seems to be undervalued, now is the time to do further research to determine if it is suitable for your individual portfolio. You have to take into account things like diversification and your investing goals and stuff like that. I can't do that. You have to do that yourself and figure out if it is good for you and your portfolio. A few things that might be useful for you. Net current asset value formula, like I said, is a floor to your price or to your value. And right now this one is negative. So it doesn't really apply because really then the floor is 0, right? Because if you can't really have a negative stock price. So that, anyway, Graham number formula. This is another thing that many people look at when they're evaluating a company. And it is based on many of the requirements of the defensive investor and the It's a formula that has been put together to put a number to some of that. And for this one, the gram number is 57.11. And the price is 40.04. So, of course, it is trading below that gram number. PEMG, like we've talked about, is the price to earnings ratio using the weighted average, and that is 7.69. Current ratio is currently 1.54. PB ratio is 1.15. Dividend yield is 3.74%, and it only has 1 year of dividend growth. So let's move on to stage 4. Stage 4 is to look at the chart. So if you've determined that this might be a good investing opportunity for yourself, then now it is time to consider whether it is a good time to buy, because we want to try to maximize our profits. And looking at the chart, we can see a few things. We've had a downward trend here since May of 21, and we have broken above that. Now that really set it up here, but it didn't really follow it down here. It broke way down below that, and in fact you can kind of see that, well, this was a support level here that it broke through, and we'll talk about that in a moment, but it is up above this trend line. Now, like I said, these are support and resistance levels, the green ones. This one goes way back, and you can see that it hits stuff there, and then it goes back here, it hits stuff there. And I think this one goes even farther back, yeah. Kind of was a support level in this general area. Then the next one was a support level at many points too. And so when it was coming down here, it hit that and it tried to stay above, but then it fell down, and it tried to also break above this one at 46-ish, which was a support level there, and back here. So these three are very key. And that's why we're kind of seeing it stall a little bit, perhaps. We'll see what happens here if it breaks above. It has kind of stayed above that number. So as of Monday the 28th, why hasn't it gone farther? Oh, this is weekly view. That's why. So this is the week. It has gone up above that. Switch to the daily view. You can see that it has hit resistance at that figure. And it may or may not break through that. It is very encouraging that it has stayed above, and it might be on a rise here. Now down here you have the relative strength index, and that shows a lot of the momentum in the stock. It has a lot of momentum right now, but it also is bordering on being overbought. Now what's significant here is that dashed red line here would be a spot where it would indicate, if it can cross above that, it would really indicate that it is in a bull pattern. And this is on the daily chart. So you can see it has been on a bull pattern for a while, for a few months now. It did, back here in February, it fell below, which would indicate a bear pattern. You can see then it was pretty flat, even though it would have momentum for a bit. But then up here, it broke above that, and it may have finally indicated that it will be entering a bull pattern. And looking at the weekly chart, though, it has room to grow there, and it has been in a bear pattern since February. So that those are things to keep in mind. I would really be interested to see what happens in the coming days as it is testing this level. If it can break that, it might make it up to 46. So, hope this was helpful. Click on the video on the screen now for another great valuation. Thanks for watching, and I will catch you next time. Take care.